Criticism has been levied by discerning critics, folks like Peter Schiff, that Bitcoin especially, but blockchain generally, is a solution looking for a problem to solve. In other words, advocates for this technology are therefore accused of putting the cart of the technology before a horse that does not even exist. The decentralization of blockchain ensures the replication of the same information over and over again across different computers, all running the same software managing the same ledger. So, not a side effect, but a critical effect, a core design. Yet this more resource-intensive approach of operating adaptable, accessible algorithms is labeled redundant by those accustomed to living with functioning centralized infrastructure, to the extent that it is functional. But according to his own account, Schiff himself ran a bank that was under duress to sell due to corrupt actors within the financial industry forcing him out of his own company, following what he alleged as a slanderous Australian 60 Minutes special on him, alleging his bank fraudulent and insolvent, despite his claims of having provably testified to cash reserves held by the bank that greatly exceeded the norm. Critics of technology in such an early phase ought to be mindful of not joining the ranks of those in the past who foresaw no practical use for the automobile in its primitive stages, accepting as a status symbol, a temporary luxury item, and another solution looking for a non-existent problem to solve, especially those persecuted by the incentive structures and entrenched bad actors in the incumbent system. Since across much of the world now the horse has become the luxury and the cart has remained, it would be more apt to say we are devising a new way to pull carts. And as much as the ways of pulling carts of industry in the developed world need correction, the implicit assumption that this is where the implementation of new technology such as blockchain must begin couldn't be more wrong. A baked-in assumption like this, probably from normalcy bias, is that blockchain as an approach to pulling the carts of financial, legal, and administrative infrastructures require vaguely defined developed nation approval and Western allowances, ones that will be never given due to their own deeply entrenched, economically feudal self-interests. This is akin to propositioning automobile manufacturers in the early 1900s give up, because the equine industry first did not foresee the potential of their products, and then later to doubly cease operations because that same industry considered the devices too expensive for the common man to ever own one, let alone use for industrial purposes. After all, at one time, for the price of a Ford, a man could own a great multitude of horses of good stock. But when Ford did succeed, other incumbencies gave him no choice but to build for their World War industrial machine. Success can come at a great cost in the place it is implemented. The assumption that new approaches, especially ones that foresolve problems created by the current industries, need be greenlit by those industries is laughable. If the incumbents foresolved their own problems, they wouldn't need reformation, and revolutions would never occur. We should therefore take not seriously the ignorance or maliciousness of institutions crumbling from the weight of their own inadequacy to solve problems that existed before their creation and continue to plague the world after it. Solutions of the past who have become shadows of their former selves have no right to dictate the solutions of the future. Those who drag us into war and disease have no right to speak on peace and health. Those who promote systems of debt-based slavery have no right to speak on financial freedoms. For the meantime, it is better to leave them to their natural downfall, whilst building anew elsewhere. This way, the corrupt have no just cause nor incentive to interfere, yet when they do, it will be too late, and serve as yet another example of the abuser who strikes out due to his own desperation to regain power and control. Turning disaster relief into financial independence. Many give charitably and do charitable works hoping that they will receive the same if they are ever in need. You will need the fruits of your own charity to return to you sooner than you might think. When this time comes, you will thank your efforts in helping implement decentralized infrastructure in less fortunate nations, and this will be your vindication. That where was built anew will provide the example, as well as the means, to reform nations that thought they didn't need decentralization, because tyranny and despair never happens here, only over there. Blockchain's core problem it is uniquely disposed to solve is in offering impartial, effective infrastructure cheaply to those where no centralized system has been able to consistently and or justly operate to reach the unreachables. It is for this reason blockchain is an economically liberating force, a formula for turning rags to riches through cheap, accessible, generative infrastructure. Beginning with augmenting current charitable efforts and applying low-cost algorithmically administered financial services to the poor and unbanked, developed nations can skip costly and inapplicable infrastructure. To my knowledge, Malaysia doesn't have copper wires under the ground. It went straight to cell towers. It could have benefited from skipping a few other things too. A subsidization without subjugation is required, one which facilitates productivity and fights covert feudalism, including that born from the banking industry. Anywhere a fundamentally unsustainable system is operated through subsidization, exists a power imbalance to the degree in which it is subsidized. This power imbalance is guaranteed eventually to be exploited and weaponized. This is why human rights abuses keep occurring in nations where the economic sustainability problem has not been solved. There can be no half measures, and this is why much charitable efforts of disaster relief and industrialization sour and create yet more charity cases in the power vacuum left by their absence. To be traditionally banked requires some entity which is administrating that account, somebody else who has access to that money, and somebody else who can have leverage imposed upon them, another point of failure. In other words, herein lies the very core reason why these people remain unbanked. Not only can they not reliably access a bank account due to their distance from the bank, but from the bank's perspective, the very cost of having them as customers due to their low relative income immediately places any possible earnings that they would wish to deposit as already representing an operating loss for the bank. Prior to smart contracts and contemporary blockchain's capabilities, how other than depending on inconsistent handouts and a continued reliance on impersonal, agenda-driven parties with ulterior motives that at best would be good PR, could charity be reliably implemented? These parties having indefinite capacity and interest to provide welfare at worldwide scale is no way to sustainably help people out of poverty, and even they don't have enough money to subsidize the world if they wanted to. The mere fact that so many people in areas that have received even widespread foreign aid and attention remain in subsistence-level poverty means that our conception of how we go about solving the problem has not worked at a systematic level. It might have even made things worse. Charity must evolve, away from merely perpetuating the need for itself and towards seeking to efficiently nullify its own necessity everywhere it has stepped. It must become ultimately more empowering and sustainable for the recipient themselves. It's not to say that the efforts for decades have had no impact. A lot of good has been done, but they didn't have access to tools modern technology affords us now, and that's what has to refine and augment efforts going forward. It comes back to the idiom that we must teach how to fish, rather than give fish. In practical terms, we must empower folks to create businesses where they can create their own clothes, protect and grow their own farms, and eventually rebuild their own self-sufficient economies. This is why creating a pathway to insurance is a building block right at the very beginning, because the function of insurance is that it can only underwrite coverage for something of recognizable value, something attached to a tangible good, service, or entity which measurably exists. In the Crowdsurance proposition, the disaster relief mechanism would not be negatively affected at all. This is not an alternative to disaster relief. In fact, it would end up being not only its advocate but also its auditor. Not only that, but it would enable more effective provision of money to afford more disaster relief efforts in future, and make existing resources go further, due to the reduction of administrative costs and the creation of sustainable structures pre- and post-disaster. What I mean practically is that you can insure a farmer out in his field, and you can insure the clothing of a textile manufacturer. You can insure the farmer's crops after he's harvested them, and you can insure clothing stock after it has been made. Insurance works as a sanity principle, inherently requiring in some sense objective, productive things to occur or have had occurred for assistance through coverage to be given. The coverage exists as the very mechanism for providing the funding, and therefore should not be considered an unnecessary extra complication. Any mechanism designed to help people that relies on insurance necessitates that both the people are real and the work is in some way measurable. However, through the implementation of blockchain as the rails for pre- or post-disaster relief, this presents an unexpected benefit as well. Not only are the insured assets measurable, and therefore the disbursed benefits themselves measurable too, but in a confluence of technologies, the economic activity enabled by the disbursement becomes measurable too. Through financial vitality of the accounts, and the choice farmers and small business owners can make to increase coverage, showcasing their improving material condition and growth of their enterprises. Thus, effective disaster prevention and relief via blockchain opens up a world within a mechanism by which low-income investors can assess other existing micro-businesses for profitability, which then propels small-scale businesses into potentially recognizable and established entities to their peers, through which they can access higher financial services previously out of reach, and engage in reinsurance activities, valuable to them but worthless to larger financial players. The natural evolution of this economic market will lead to the nominal value of their activities rising, opening them, the more they engage, to more opportunity from wealthier interested parties. I foresee narratives about real-world assets such as these to take main stage in the minds of the modern corporation. Though I doubt their first thoughts will be of poor rural farmers, they are of course looking for real yields in parasitic, debt-based, incumbent financial systems offering only liquidity traps in one large game of greater fool theory playing out. The proposition here is a departure from foolish games and a return to something more sound, grounded in labour value and measurable production through self-interested demand for protection against risks posed to that production on behalf of the people doing the producing. Such objectivity in post-relief disbursement has a direct relation to measuring whether outreach efforts are having any kind of positive or negative effect also, and can justify the securing of more funding by organizations involved in these endeavors in an objective manner like never before. Importantly, this also affords a final, defined endpoint to the need for aid in a locality, instead of the perpetual suffering machine where there are never enough resources, and the need is only increased by those which are temporarily available. There becomes a defined point where the insurance structure is mutualized, meaning the disaster relief funds are financially supported by the insured themselves, covering each other, and the underwriting is no longer subsidized by the disaster relief or preparedness organization and its efforts, no longer needing constant external input or non-governmental organizational monitoring. Each mutualized structure then becomes a measurable success story, with a beginning, middle, and end. And from that point, those most positively impacted can tell their friends and families, further expanding the reach of the mutualization infrastructure in a greater radius, and the charitable organizations can secure more funding through these measurable success stories. It is the efforts ultimately of the charitable organizations that will provide the seed funding and help geographically spread the risk through their outreach. They will also assist with consultation from those with underwriting experience to devise sensible pools of policies that use sound principles to enable mutualization without subsidization. It is possible for a rural farmer or business owner to have a bearer account in the form of a digital wallet, and for their modest income to comfortably exceed the threshold of the administrative costs, minimal, mostly in the form of small transaction fees, It is far easier to engage with an entirely digitally native and algorithmically driven system through rudimentary means such as text message, or through strictly necessary intermediaries when no other option is available, than it would be to correspond with a traditional banking entity through any comparable medium where human beings as the staff members must make manual changes. So the goal is not merely to establish a means with which there can be communication between parties that wish to donate money, or in the future even trade for business purposes and commercial ends. The goal is more crucial than that. It is to harness the goodwill, hard-earned international relationships, and existing disaster relief infrastructure to contribute to very low-income individuals considered not worth a bank's time to be empowered and enabled to use blockchain in order to create real economic protection and opportunity. Some of the obstacles to disaster relief include that it is slow to get assistance on the ground, difficult to determine who needs what resources the most, and with limited communications infrastructure, this is exacerbated. The problems posed by chronic unbanked status, that is, the impossibility to provide any form of remote financial assistance or critical, timely information, is also a problem. As Elise Lee said in Lecture 3 of D1 Conf 2022, she spoke of a, quote, tragic irony that smallholder farmers produce a great deal of the world's food supply, more than 30%, and yet themselves are most likely to go hungry. One of the biggest problems subsistence farmers face is the fact that they are hard to reach. They predominantly reside in rural locations, and often in corrupt or poor countries that lack meaningful infrastructure of any kind outside of cities. Access to global markets, healthcare, financial services, and education is poor quality and inconsistent, if existing at all. Though the bank might not consider a couple of American dollars to be of great value, the smallholder farmer certainly does, which means that if you can effectively, cheaply, and quickly get a couple of dollars to them over technological rails that do not discriminate on the basis of economies of scale, you can have an immediate and outsized impact. A pool of a few $100,000 or $1 million, quite small in the grand scheme of non-profit resources, could affect tens of thousands or hundreds of thousands of farmers in ways that were never dreamt of by traditional reactionary aid. It is not unthinkable for $1 million to cover at least 500,000 farmers, if not more, but greater than that, the geographically dispersed nature of disasters leads to the risk becoming geographically diversified also, another factor contributing to good underwriting. These principles of coverage and access inform good underwriting principles from the beginning, even if the entities involved lack insurance experience or, crucially, a profit motive. Thankfully, all that is required for this to work is the means of actually making contact with these farmers, though, as has been established, this can be easier said than done. Whether for religious mission, healthcare visits, food drop-offs, or full-blown disaster relief efforts, it would be better overall, but not strictly required, if contact were made before disaster relief was needed. Importantly, these blockchain policies also mean something else for the farmer. They mean that preventative efforts are not just in case a disaster occurs, but it is actually regardless of whether a disaster occurs, and this is because of the advent of perpetual saving that comes along with this blockchain approach. So why bother with the insurance part? Expanding on a prior point, why not just set up a direct disaster relief fund that would cover people who have signed up for these policies? After all, we might say we have vastly improved the situation of disaster relief just by doing this, that even this itself would be a paradigm-shifting change. So why bother with the insurance part? The problem is twofold. With just this approach, there is no roadmap to independence. It relies on a continual investment of outside resources. In essence, it can help the farmers subsist. It doesn't necessarily help them thrive. It doesn't help the farmers themselves become entities with disposable income, excess value, which will be rising above subsistence meaningfully, with the ability to make decisions that could help them grow, such as making investments in tools and resources and in education, not to mention other businesses that would further their position of strength, with the disaster relief coverage as support in the background. The second issue is about promoting business ownership and employment. Community dependence, not third-party dependence. Businesses that can have employees and therefore can have a positive impact in their community must be motivated to be resourceful, not forever at the mercy of external, usually foreign financial interests who wield a direct power over them and the legitimacy of their business as an investable vehicle. Number 3, insurance no-claims provides both a safety mechanism for potential investors, but the beginning of a business identity itself, one which can engage in cooperative buying and selling through means of blockchain, and or invest in spreading risk through purchasing futures contracts, for example, as has been a key factor of farming resilience elsewhere. When every farmer who is poor is merely reliant on an automated payout when something goes wrong, the farmers themselves are not as motivated as they might be to make sure that they are creatively farming in ways that can help them be resilient to disasters, ways that may cost time and money for no direct benefit in the short term. So in a way, permanent, external, non-profit financial underwriting would improve disaster relief itself, but not the overall resilience of farming. Thus, it would be reactive and not proactive. A moral hazard, too, because there is no inherent concern when disaster strikes other than the immediate unpleasantness of the disaster. No reward for those who plan ahead, who ought to be left in a position of influence, so their resilient, proactive, productive ideas can spread through having means to acquire less disciplined farms or business in their localities. It may be the case that farmers who are diligent may need to purchase the lands of those who have lost it all due to not planning ahead, taking those on as employees, and thus the diligent gain positions of authority that allow them to have lasting positive impact on farming practices in their local communities. There is no immediate concern to prevent against the disaster if you know that you will be bailed out when it happens. There would be, for example, no ability nor concern to send sons to establish a farm in some other region of the nation to spread risk. Sending your family member over to run that farm would have been sacrifice and hardship for no reason. At risk of insulting the listener's intelligence, I want to hammer the point home that the mind of a farmer who is entitled to receive other people's money in totality, if something bad happens, would actually be disinclined to make sacrifices to become more resilient, to make preparations, than a farmer who had contributed his own resources into his own policy. We do not want to place farmers in a type of financial feudal reliance on third parties. Many poor regions suffer from human trafficking and exploitation as it is. The goal should be to create independent and resilient communities that stand a chance of reforming local leadership, and one day putting an end to predatory practices that happen in their nations. Considerations on fraud. I ought to elaborate on why Crowdsurance believes the way of establishing these systems of resilience and independence cannot be through a for-profit mechanism, why it has to be done through a mutual coverage structure. Let's begin with the fact that the very problem we are trying to address is that subsistence farming is both highly unprofitable and risky. Therefore, any for-profit enterprise that could engage in providing disaster coverage, for example, of micro-enterprises as they may be called, would need to charge a high sum of interest. This would almost immediately need to approach 100% of the actual covered amount, meaning the farmer is effectively paying some degree of rent or premiums that he likely cannot afford. There will be an incentive also to indebt the farmers in some way to pay for their insurance due to the risk of the underwriting. In the amount of coverage that they would provide, it will be very unlikely that insurance coverage could consistently be provided by an entity that seeks upfront to make a profit, especially at premium rates of 1, 5, or 10%, which would be preferable, which removes one of the core benefits proposed by the parametric coverage not yet addressed directly. The fact that not only is it easy to cost-effectively access the farmers, but there is also no inherent structural need for a middleman who needs to take premiums. Thus, a middleman is entirely optional, and from the perspective of Crowdsurance, in the infant stages of an initiative like this, both counterproductive and destructive. A for-profit underwriter always acts as a middleman structurally to the way the coverage is engineered, in a way that a non-profit entity does not. A for-profit entity always needs to take money out of the policy after the term has ended because he is there to make money. This means that all the money left in the policy after claims cannot return to the farmer, only some of it, and likely none. This immediately removes the dual benefit and sustainable nature of the algorithmic disaster relief and insurance underwriting as a vested savings vehicle. The farmer is also not likely to receive the true level of coverage he actually needs, underinsurance, due to the risk of underwriting for profit. And underinsurance is already an issue in these regions as well. The relationship existing between the farmer and the non-profit entity or collective entities who provide the underwriting against the risk is mechanically regulated, protected, due to the parametric, algorithmic nature of the insurance itself. When the insurance adjusting and claims managing is done through algorithmic means, objective trigger mechanisms such as satellite weather data and smartphones used on the ground determine and directly initiate whether a payout does or does not occur. This decision-making happens outside of involvement with the business owner, policyholder, or the charitable financial contributors doing the underwriting. Thus, this is outside of the means of crude manipulation poor rural policyholders would have access to deploy. In a worst-case scenario, a farmer could theoretically fraudulently take out many policies. In a case that reasonable checks and balances on the ground were not present on the part of the charitable organization, and or dependent on the way in which policyholders were signed up, for example, anonymously, where there is risk of violence against policyholders from their local regimes. These policies would not pay out to this individual farmer if there was no disaster. So a farmer could have, in theory, 100 policies, but of those 100 policies, the same farmer would not receive payout unless a flood had actually occurred. Farmers do not have the ability to control the weather, so they cannot game this system. In the case where contributions are matched, say 50-50, or it consists entirely of farmer contributions, the latter would have zero incentive for the farmer to commit fraud. This is what makes it different to other mechanisms that would merely give farmers money, or require a middleman to take profit at the end of the term. The incentive to commit fraud decreases, or entirely vanishes. The more the policy pools become mutualized, the more this is the case. The mutualization must happen due to geographic diversification, to fight the climate risks, which means that due to geolocation technology, farmers would be materially unable to commit large-scale fraud and have no personal financial incentive to do so once there is no need for external underwriting inputs. The farmers are effectively covering each other. It would be the case that some would want to use the money in ways that do not create sustainable structures, or to game the system to acquire more money than they otherwise might, breaking the fairness of the system. Tying it to an insurance policy makes a disaster relief more effective because it combats fraud due to objective conditions on payouts, and thus it promotes justness and clarity on the matter of remotely distributing funds. Those signing up these farmers to policies would have a personal stake in signing up a wide range of people to the policies, not only from a moral or ethical point of view, that they've ultimately been commissioned to do meaningful work, but also the fact that, yes, if there were an unusually high amount of claims in one region, in one specific place, then the farmer would immediately be under scrutiny during onboarding or prior to claim payout because the amount of policies in one geographic location would be flagged up algorithmically to be anomalous and suspicious, which provides an incentive to input accurate location information on the part of any salesman who may be operating on commission. Now you may ask, well, would they not, in this case, we assume the worst, conspire to place these fraudulent policies in different locations? They might, but in this case, why would they do this? If they go too far out of a catchment area to begin with, then the natural disaster would actually not apply to the policy. So they are in geographical limitations from multiple fronts that provide a mechanism to prevent fraud that is not exclusively at the on-the-ground level, which is inherently hard to monitor. Additionally, the case where insurance payouts become an attraction to the despot of a nation. First of all, a small disaster would not be worth their time, and a widespread natural disaster would be too geographically dispersed through complex terrain and distance to reach all the parties quickly, let alone locate them, giving parties time to flee. In cases of widespread extortion and violence, safe zones on national borders and/or NGO-protected areas can be established, where payouts are conditional to be unlocked in that geolocation only, or after a delayed period of time. Conditions can be placed on payouts at the discretion of those who deal with the circumstances on the ground and know the dangers best. This places power in the hands of those who do the work on the ground to know what conditions are needed and apply them directly as one of the pre-established protocols they follow, or leave it up to the higher-level managers and analysts to take feedback in and assess the needs on a regional basis. Further growth opportunities. Insurance no-claims affords access to loans and for-profit relations, effectively acting as a reputation for the business. Developed and undeveloped nations can use and benefit from blockchain alike. It levels the playing field. It brings them together on a common currency, which is severely lacking within these instability-stricken regions. Clearly, operating on the basis of a common currency can open up new markets for the producers like never before, but these currencies need not be the native token of the blockchain itself. They could be labor-backed currencies or union tokens. NFTs of these could behave like stocks in a company. This grounds the monetary system to the labor value, tying the health of the financial system to the health of the producers, and presents a direct economic cost to those who would wish to be antisocial towards the health of the producers. It can outmode commercial middlemen and corruptive interests. It can hedge against local currency inflation, including, as aforementioned, the establishment of decentralized futures markets. A natural progression to healthy, pro-social unionization through meta-algorithmically unionized money. It overcomes coins like Ethereum being affected by price factors outside of direct labor activities, which would undermine earned value and sufficiency of insurance payouts. And it partially mitigates issues with proof of stake and some of the unsound monetary issues with any currency that may be used. Aligning for-profit interests with environmental sustainability. When covering each other, they're motivated to decrease everybody's risk. They're also motivated to share information, like irrigation resources. This is why it's key that we move into mutualization. The peer-to-peer incentive structure is harmonized for everybody to benefit. The harmonized incentive is that they want two things at the same time. They want suitable coverage should something bad happen, that is, that the insurance policy be effective. And they want to receive the most money back possible if nothing happens to them, so its function as a savings account. And they can further decrease the risk by engaging in reinsurance. Existing mutualized unions, such as by a group of productive farmers, can decide to themselves to begin offering insurance to risk disparate industries. Farmers may wish to reinsure miners or fisheries. It can be for profit, but it's underwritten by a mutual to begin with. Intra-industry must remain as mutuals. However, inter-industry insuring can still be for profit. The interests align because producing efficiently is in the interest of all who are involved in a mutual already, reducing each other's risk, and to maximize coverage with the most money left over as possible, which is the dual incentive we've previously discussed. But this balances, as the dual incentive, that they wish to contribute less money for more coverage, whilst wanting the most return on the money they have contributed. Simultaneously, efficient production would also be in the interest of those who are being insured, as this reduces the total cost. This set of motivations represents the synthesis of for-profit and non-profit insurance relationship interactions, without financializing risk as traditional for-profit insurance does, or introducing the perverse incentives that would otherwise occur, that is, purposefully increasing risk, as many for-profit insurance groups do. Using derivatives to decrease risk would be the first time risk is being decreased by financial ownership, that is, contractual rights, rather than direct physical activity for previously non-financialized groups. So then we have derived a risk portfolio that is diversified by the use of financial instruments rather than direct geographical means. What this also addresses is an old question the insurance industry has grappled with, of how to scale mutuals. The problem is solved because the mutuals themselves can now engage in profit-seeking behavior that does not introduce the structure of perverse incentives that otherwise would have presented the conflict of interest within their practices, or undermine the mutual, that is, insureds covering other insureds. But it gets even better than that. Crowdsurance proposes this approach ultimately introduces a socio-economic mechanism for environmental sustainability. In other words, for the first time, preventing overfishing actually becomes profitable. Their profitability is, for the first time, hitched to the cart of the sustainability of the other agricultural industries, directly. Additionally, industries built on top of servicing the primary ones gain direct financial penalty should they irresponsibly threaten the natural ecosystem that affects all production industries. An example might be a factory owner taking care of his waste product. He is using materials from the miners, but he will be hesitant to pollute the waters under the care of the fishermen, due to it directly negatively impacting everyone's financial well-being. Such is the interest of unions with an economic stake in the ecology, and we can call this mutually assured sustainability. Following this, we will likely begin to see unions reinsuring the collective industrial production or unions of other nations. The same mechanism that allows unionized insurance pools to work locally will also drive them to work internationally, bringing this baked-in environmental stewardship with it. Though, as it scales up, ecological harms in one region would have a lesser effect on the wealth of the overall economic pool, much the same as risks from climate events are reduced. So a point of concern is to make sure that unions do not become too multinational in their mutual reinsurance, else a moral hazard may be created. In closing, the mutual insurance pools that engage in reinsurance will generate for-profit yield that benefits the dual incentive of greater coverage and end-of-term financial reimbursement. We can expect the free market incentive to quickly lead to reinsured mutual pools as providing the best returns for their union members by utilizing this earned yield. This also begins to create a new economic model where futures, forex, and fungible currency can take form out of the underlying value structure being created here, giving birth to a financial system that is not predatory towards, but rather consistent of, the harmonized interests of labor and business owners. Solely capital interests will nonetheless find a place trading and administrating aspects of these systems, but their interests and concerns will no longer take primacy, like we've been so accustomed to in the world right now.